Even with a perfect strategy, if you can't manage risk, you're going to blow up your account. This is actually the most important part of this 3-part bootcamp futures trading tutorial, because trading isn't so much about how you enter a trade, it's about how you survive a trade. In the first episode, we entered our first trade. We placed a stop loss, we placed a take profit. And in the second episode, we talked about different indicators and strategies, how we can use different strategies, indicators together to get a good idea on how we should trade, whether we're entering for a long or a short. But now it's time to talk positioning, sizing, and of course risk management. This isn't just about managing trades, it's about managing your emotions and how you can be profitable consistently. Anyone can be profitable in a day or even in a week, but those that actually make money from trading are people that can manage risk and manage emotions and do this week in, week out, month in, month out, and year after year, consistently profitable. So the golden rule for trading, for risk management, is the 2% rule. Do not risk more than 2% of your entire portfolio in any single trade. So again, we're going to use Ethereum as an example, USDT, it's probably easier to understand. And for easy maths, I've made it so my account available balance is $1,000. We know that 2% of 1,000 is $20. We're not going to be risking more than $20 per trade. And we're going to, of course, make sure that our risk to reward is healthy as well. We're going to be looking for a minimum of a 2-to-1 risk to reward. So if we're risking 2%, we want to be set to win at least 4%. So what we're going to do here is we're still going to use leverage. We're going to use isolated margin at 5x leverage, and we're going to use our entire balance. And you might be thinking at this point, well, hold on a minute, Alex. You said we're only going to risk 2%. And we are. We're going to do that with a stop loss. So we're going to click on advance here, and in the percentage of the stop loss, we're going to press 2%, which means that we are risking, as we worked out previously, about $20. And the profit, we want at least 2-to-1, and we're going to put in 4. So our potential profit here is $40 and the loss is $20. Of course, we're not using any technical analysis for this trade, but this is just to show you what you need to be looking for correct risk to reward. So if we wanted to confirm that, of course, we just press confirm, and then we could open that trade with the correct risk management there. But then you might be thinking, well, I don't want my stop loss set in that place to give me a 2% loss. What do I mean? Well, in technical analysis, you're going to, do your charting, do your price chart analysis and so forth, like from indicators that I've shown you. And you might say, well, I know this is the support level, and actually I want my stop loss set somewhere around $2,400 beneath the support, but I only want to risk, of course, 2%, $20. So the way that you're going to do that is to do with the balance that you use, the margin. So if we know that in terms of percentage, $2,400 is about 5.5% away, and with 5x leverage, well, you're going to need to bring that down to roughly 5% as shown on the margin. And then if you go to advance, and instead of the ROI percentage, put P&L, put $20 loss. Well, now you can see using this setup, using this amount of margin, 0.09 in this example, could be 0.1 for 5% of your balance. That's going to allow you to set your stop loss at 2,400, and still only have a 20% loss. So we know by doing that, that's the correct setup. So to show you an example here, let's set our stop loss as we did at 2,338. We're going to press confirm. We'll actually use a take profit just to show you the example as well. So we know the P&L is $20. We always want at least, a 2-to-1, but we're going to target up here 2,850 advance. So we're not going to do percentage, we're going to do P&L, and we're going to put 2,850. Well, we are potentially winning $30 against losing $20. So not the best risk to reward, and that's how you find out if a trade's good or not. But for this example, Pretty good example, you could say. We could actually use our long position tool to map that out and do 2850 just to give you kind of a visual on what that means. And you can see our risk to reward ratio is above 2-to-1, so not bad, not terrible. And we can enter that long, so we know our liquidation price is way beneath our stop loss price. Press confirm. And there we have our trade open, and of course, along with our stop loss and take profit price. So we can sit back, relax, go to the gym, go to work, and not worry about it. And the best thing about it all, if we get stopped out, if we hit a stop loss, it's not going to ruin our day because we're only going to lose $20, 2% of our portfolio. If you had $100 in your account, you're only going to lose $2. Doesn't matter if it's dropped 5%, we've adjusted our margin and our leverage accordingly. Now let's talk psychology, emotional traps. Psychology is a huge part of trading that definitely doesn't have enough emphasis from crypto YouTube or social media. It's just not talked about as much as money management, risk management, psychological trading, and emotions are so important. Everything is about fear and greed when it comes down to trading. So you need to be on the right side of that. So let me give you 3 of the biggest traps when it comes down to psychological and emotional trading. First one is revenge trading. Let's say you have a loss. The natural kind of human psychology element is I need to win it back. And, gamblers, it's a gambling mentality. When gamblers lose a trade, often they want to bet again to win that money back. Don't fall into that trap. The worst time to open a trade is when you've just been you've just hit your stop loss or you've just been wrecked. Hopefully you're not wrecked from watching this series, but that's the worst time to enter a trade. The next one is over leverage. We can easily get addicted to leverage because by using higher leverage, of course, you can make more money more quickly, but you can get wrecked easily as well because your liquidation price becomes closer to your entry. So be very careful with overusing leverage. And then it's just simply over trading. Don't trade too many times within a trading session. The more trades, the more mind, energy, and power it's going to use. Stick to no more than kind of 3 to 5 positions a day if you are like a scalp trader. Definitely don't need to be trading more than that. Focus more about the quality of the trades, finding the right setups than the quantity. Some rituals for consistency. I think it's very important to log every trade. You should have a trade journal or trade diary. Note down your trades, your enters, your stop loss and take profit, and the reason why you're entering that trade. You should definitely be using trade alerts like I've shown you in other videos with CoinGPT. You should definitely use a platform like CoinGPT because AI allows you to know the stop loss take profit levels, and you can set trading alerts on there so you can be alerted when a coin hits a certain oversold condition or overbought condition. That will help with your analysis and knowing when to enter at the right times. All right, so a final recap on this crypto futures trading bootcamp that you've now watched through. You've signed up for a great platform like Phemex, you've placed your first trade, you've learned about risk management, about leverage, about using correct margin, and of course, using different indicators and strategies to be consistently profitable. The next step really is just to trade smart, stay consistent, use the correct tools and mental notes to help you stay on track. If you have found this valuable, remember you can sign up for Phemex down below. That is a bonus link. So when you make your first deposit, you'll get 20% back up to $500 for free. Again, it's a no restriction exchange, which means no matter where you are in the world, you can sign up verification free and trade crypto futures on Phemex. I would also suggest to join my free Telegram signals group down below. You can communicate with, of course, myself and my trading community and other people as part of our community on our trade setups, and of course get some ready-made analysis there as well to help you on your way. So thank you very much. If you found this useful, please share this in your own communities with a friend, and I look forward to trading with you in my signals group down below. See you on the next one, guys. So take care. Bye-bye.